Let's talk about scaling smart. Hi, I'm Jane Muir and I'm a business lawyer here in Miami. A lot of people confuse the question of what kind of entity they have when it comes to LLC or corporation or partnership with the tax treatment of a company, S-Corp versus C-Corp. And these two things are totally different references and meanings. For example, the entity type, meaning does it say Inc. at the end or Co? Does it say LLC at the end of the name? Does it say PA or partnership or LLP, something like that? Those are references to the state's individual statute that applies to that kind of entity and creates the rights and responsibilities of the people who are involved in the entity. S-Corp and C-Corp references a part of the Internal Revenue Code. And when you have an S-Corp, you're only paying taxes on the profit that comes to the partners. And the kind of tax filing you file is a K-1. If you have a C-Corp, then you have to pay taxes twice, on the company profits and on the individual receipts. S-Corp election is so advantageous that it is not available unless you're under 100 owners, you don't have any foreign owners or any corporate owners. So if you're scaling up and let's say looking for investors that might be institutional investors, then you would want to change to a C-Corp because you're not allowed to sell any equity to anyone who's a corporation or a foreign owner as long as you're an S-Corp. However, S-Corp status is usually more advantageous when you're starting because you might have one or two or even 20 or 50 owners. It's just a lot different from having thousands of people investing in your company.